Hello everyone, this is Professor Kent. Today's recording is a review. It's not a midterm, it's a review for chapter 1, 2, 3, 4, and 4 chapters, the first 4 chapters. So first chapter is all about theory. I'm sure you could go back and read the theory, but the second chapter was to calculate the cost of goods manufactured and cost of goods sold for the company for the year. So if we ask you to do cost of goods manufactured, the first thing you're going to do is the name of the company. In this case, the name of the company is Excellent Manufacturing. So that's the name of the company. Maybe I can make my pen a little bit. Then what are we preparing? We're preparing cost of goods manufactured. So we have 3 manufacturing costs: direct material, direct labor, manufactured. Direct material, direct labor, and manufacturing overhead. So when we do that, first thing we are going to do is start with beginning working process inventory. So we have a beginning working process inventory that is given to us in the question, and it is inventory. W slash P is work in process inventory. VENTORY, and we start with 100,000. So that's what we are starting off with, 100,000. Then our first one is the heading is direct material. When you do that, we add, what do we add? The material. So we have a beginning raw material, direct material, raw material, same thing. So beginning raw material is, we have a 50,000. We started off with, our ending is 56. We purchased some of the material. In this case, we purchased. So if you purchase and it is a direct material, raw material, same thing. We purchase 30,000. So that's what we have it available. So this is available to use. So raw material available to use, direct material available to use, direct available to use. If I add both of them together, it is my 80,000 minus my ending raw material, direct material, and that is, they told us it's 56, so I minus the 56,000. Difference between those two is the direct material used. So that is that we used into production. That will be my 24,000. So we have a direct material, direct labor. In this case, they told us what is my direct labor is 164,000. So that I will be adding it. Now we are going to go to our heading is manufacturing overhead. Manufacturing overhead. So anything that is related to the manufacturing, it will come in here. So if I were to do that, we have a depreciation on plant and equipment. That's our first one. Anything that relate to, it's not directly related to the product, but indirectly. So plant and equipment, that is my 26,000. We have a repair and maintenance, and it is for the plant. So 8,000. Insurance on the plant, and that my 18,000. General admin is my period cost. They're not product costs. We have an indirect labor, which is your 30,000. So these are my manufacturing costs. In this case, that is my manufacturing cost. That works out to be 82,000. So now what happens in this case? Now if I add my total manufacturing overhead, that I add these three numbers. So if I add these three numbers, I get 270,000, and I add it to my beginning working process. In this case, sorry, I add, I don't know why I did a minus, so I add it to my manufacturing overhead. So, and then what we're going to have it, we are going to have total manufacturing cost. This was your manufacturing cost, and that we have, I don't know why, manufacturing cost, so that will be 370,000 minus my ending manufacturing ending work in process, and end of working process was 70, so ending working process is 70. I minus it, and then what do I get? Cost of goods manufactured. That is my 300,000. So I need this to do my cost of goods sold. So in order to do my cost of goods sold, you're going to put the name of the company, and then what we are doing, we're preparing cost of goods sold. When you do that, you start with your finished goods inventory. And that is your 36,000. We started off with beginning finished goods inventory, and then what we're doing is we add the cost of goods manufactured. And that is your 300,000, and that will give me cost of goods available for sale. If I add two together, 336 minus my ending finished goods inventory. That is your 36,000, and we are not 36, sorry, 50. That's my 50,000, and then we got cost of goods sold, and that is my 286,000. So you need to first get the cost of goods manufactured, and then you could do a cost of goods sold. Our next example is, there's two type of income statement. One is a traditional, and this is a traditional income statement, and from there what we're going to do is we are going to complete a contribution margin, a contribution margin income statement. Again, we have a name of the company, it is Eva's Hats, and then we're going to say you have a income statement. Let's do that. So we're going to do contribution margin income statement. So again, we started off with the sales revenue. That is my sales revenue, and then what do we have? We have my variable expenses, so we have to list all the variable expenses. So let's do that. So my variable revenue was 852 300. So what we wanted to know from here to there, we needed to split which ones are your variable expenses, which ones are your fixed. You have to separate them, and when you separate them, you needed to do what the question is asking you to do. So let's go and read the question and see if we can prepare our contribution income statement. And then it's for December 31st, so that doesn't change. So they say, for internal planning and decision making purposes, the owner Eva Hats would like to translate the company's income statement into a contribution margin format. Eva Eva's hat is an e-trailer, and all the costs of goods sold is a variable. So if first one is my cost of goods sold, and that is my variable cost, so we know that that is the 498,900. So everything is variable. Going further, a large portion of selling and marketing expense. So my next one is my selling and marketing expense. So I'm going to do it this side so that we know what we are doing. Selling and marketing, the expenses are 56,700. So that's what the expenses are, 56,700. They said a expense consisted of a freight out charges, which is 60. So we have to take out the freight first, and then freight, that is also variable cost, and that is 16,500. And then we're left with 40,200. So we want to know what to do that with that, which was also variable. So this is also my variable expense, so we needed to incorporate in there. So they said only 20% of the remaining selling and marketing expense, and 20 of the webs are variable. So only 25% is variable. So whatever this is, 20% is my variable expense, and then if 20 is variable, 80% of that is my no, sorry, 25. First one is, so the first one is 25%, then we will have to do 70%. So if I take 40,200 multiply by the 20%, 25%, I get 10,500. And this is my fix. I take the 40,200 multiply by the 75%, I get 30,150. They said this is variable and this is variable, so I needed to add both of them, and it is my selling and marketing expenses. Let's do that. And I have 16,500 and I have 10,500. So those are the two that I'm gonna add it together. In this case, it will be your 26,550. Then we're looking for website maintenance expense. We look at it, website maintenance. They said out of the 53,000, we have some was variable, some were fixed. So we have 20% that was variable, 80% will be fixed. So let's do that. Fixed, so 53,600 multiplied by the 20%, and it will give you 10,720. And then you're left off with 42,200, 42,880. So let's do the first one. My website is 10,720, and I will worry about the fix later. They said the other fix is 90% fixed. So from here we have 90% is your fixed and 10% is your variable. This is the last 9. So if this is 10%, let's do the other operating expenses. And that is 1720, 10% of that. So we have 1720, and that's the rest. 90% of that is fixed. So we are done with all your variable expenses. You can have another title, total variable expenses. In this case, my total variable expense, I add them together, which is 537,890. So if that's my variable expenses, then we have something called a contribution margin, and the difference between the both will be your contribution margin. I'm going to try to get my calculator. Let's see if I could get it to work. So we started with 852,300 minus 537,890, and that gives us 304,410. So that then we have, what we have is your fixed expenses. So whatever we left off with is my fixed expenses. Let's do our first one for selling and admin, selling and marketing. So we have 30,150. That's our first one. And then we are going to go to website, and that is my second one, website maintenance. That is 42,880. And we also have a 90% of other operating expenses. So my other operating expenses, that is your 17,200 multiplied by the 90%, it will give you 15480. So 90% of this, so which is 5480, and this is 1720. We already did that. So I'm just going to erase out everything because there's so much on my screen, so I like to make it a little bit neater so it's easy to see it. Now what I'm going to do is I'm going to add up all my screen is not there, but that's all right. So then add up all your add up all your fixed expenses. That will be your total fixed expenses. If I add them together, pences, that will be my 88,510. So then I will take my contribution margin, and then I minus it from each other, and what do I get? I get my operating income, and that is my operating income. And then since we have the same information, we'll get the same answer. 225,900 is your operating income. That's what the income was under the traditional method. Under the contribution, we also have the same one. So the answer is same. How we arrive to that arrive to that makes a difference. So let's go to our next one. Next one is a high-low method. So in this case, using the high-low method, what is the variable maintenance cost per machine hours at Red Dot Manufacturing? When you do that, we wanted to look at the high and then the low. So let's look at the high and then we look at the low. So you look at the dollar value and then you look at the machine hours. So in this case, if I were to do that, we look at the machine hours. If I were to look at the machine hours, this is 14,500 is your lowest and 17,300 is highest. So you always look at the activity and then the dollar value. In this case, 9860, and then we have 8600, and then we have a high is 7300, and this is 14,500. So you take the difference between the dollar value of the amount and the number of machine hours. So take the difference between the both, it gives me 2,800. Take the difference between those two numbers and it gives me 12,000. I did it the other way around. Sorry, I thought this is 1260 and this is 2,800. So the difference between the both is just the 2,800. So first thing is, when you're looking for variable cost, rise over run, over the dollar value over the number of hours. So in this case, my dollar value is 1260. My difference is 800. So this is what we call as rise over run. So what are we looking for? We're looking for, what will this give me? A variable maintenance cost. So we have two type of costs in maintenance. This variable maintenance has both fixed and variable because it's a mixed cost. So per unit, per machine hour will be 0.45. So this is a variable maintenance cost per machine hour. So this is per machine hours. So when this is the first one using the high-low method, what is the variable manufacturing cost? So this is the variable manufacturing cost. So that was the first one. Number two was using the high-low method. What is the monthly fixed maintenance. So we have y equal to a plus your bx. So in this case, this is my total expenses, and this is my fixed, and this will be your variable. So this is your fixed and that is your variable. So when you're taking this, you either use a high or low. We don't mix them up. So if I use the high, I know my total expenses are 98.60, and I know what they're saying, what will be the fix. I'm looking for this x, and my b is 17,300. My x is my 0.45 hours. So what happens is your b does not change, your x is changing. So that's how you will do it. Or you could just put it in the way it is. 0.45 is per machine hours. 0.45 is your per machine, 0.45 is your per machine hours. How many machine hours under the high is 17,300. So those are the machine hours. Or you could put it under the low. So in this case, you could put it under high or you could put it under low. I don't know what I did with my calculator. I'm going to use my phone. 0.45 multiplied by 17,300 gives you 7785. And if that is that, so I needed to equal to 9860. So these two numbers equal to that. So I take 9860 minus the 7785. I will get 2075. So that is my fix. Number 3 is using it. Now what they said is, what if the machine hours were, what is the total manufacturing? So we are equal to y equal a plus bx. So we know my fix stays the same, which is going to be 2.72075. They told us that the machine 0.45 is variable cost per machine hours, and they use 18,000 machine hours. So when you're doing it, they're looking for the total, which is your y is equal to 10,175. So that's my my total cost. So let's go further. Now we're going to go to chapter 4, and which is your break even. First one is you're looking for a contribution margin per unit. So for that you need a selling price per unit. So this is everything is, I'm going to put it at the top, is per unit. So that is your $15.20. We have a variable cost, and that variable cost is per unit, and that is $12.35. And if I take selling price minus your variable cost, will give me contribution margin per unit. And that will be your $2.85. So that is the answer for A. So that is the answer for A. Then we are going to go further. The question says that what is the contribution margin ratio? So they want you to show this in a form of percentage. When you're doing a form of percentages, I'm just going to do this table, and this was your answer for A. Now I'm going to do it with, they're looking for a percentage. Your sales will be 100%, and your contribution, how do we get it? Your variable cost in a percentage, you take the variable cost divided by your selling price, which is your 1520. In this case, what we're going to do is you have to do it to 2 decimal places, and that is my 81.25%, and the other one is 18.75%. Either you take 100 minus the 81.25, or you can take $2.85 divided by your selling price, which is your 1520, multiply by 100 to get to be shown in a percentage. What is a break-even unit? Break-even unit is you recover your variable cost and you recover your fixed cost. So the formula is fixed cost, fixed expenses divided by contribution margin per unit. If you need the break even in units, you divide it by contribution margin per unit. So fixed cost will be given to you in the question, and my fixed cost is 151,050. What is my contribution margin per unit is $2.85. So then in order for them to break even, they needed to sell 53,000 units to break even. Then the next one is break even in dollars. So first one was break even in units, and then break even in dollars. So again, you have your fixed and then fixed cost divided by contribution margin, and we need a ratio. So then when you need a ratio, you divide it by 18.75%, and at the top you have 51050, and that will give you 805,600. So again, or you could take whatever your break-even unit, multiply by the selling price. My selling price is 1520. This will also give you the same answer. So depending on what is given to you in the question, that's what you're going to do. So what will be the break-even unit if they don't want to just break even? Break even is you recover your variable expense, you recover your fixed expenses. So when you do that, you have nothing for save for yourself. So they said, what is the break-even in units if they wanted to break even and make target profit of 30,000? So all you're going to do is change the formula a little bit. Your fixed cost plus your target profit, and divided by your contribution margin per unit, because they're looking for break-even units break-even in units with the target profit. So my fix was 151,050, and then we have a target profit is given to us in the question, 39,000. My contribution margin did not change. In order for me to break even and make a $39,000, so it's 39,000, I need to sell 66,684 units in order to break even and make a 39,000. The other thing we talked about in this chapter was margin of safety. You needed to learn that, and we also learned about degree of leverage. So if you are in my class and you will be doing a test, you needed to learn these two concepts too. So those are the only two concepts we did not cover in this review, but then it's your job to cover them. But if you have questions, you could send me an email or reply or send me a message underneath the video so that I can answer those questions. Thank you so much, and thank you for watching me and learning with me. Take care and bye for now.